How much home can I afford making $50,000 a year? So a lot of times borrowers understand that they make a certain amount of money, right? A year. However, they don't know or really understand how much they qualify for. So let me break it down. When a lender looks at a borrower's income, we look at gross income. So someone who makes $50,000 a year makes approximately $4,166 a month. Now, from that $4,166 a month, let's take best case scenario using FHA. On a max, FHA's housing ratio will allow for you to do 47%. 47% means 47% of your mortgage payment can exceed 47% of your monthly income. That is the front end housing ratio. The back end ratio is a combination of housing ratio and current debts that you have. But let's talk, we're going to utilize the front end ratio. So what that means is on $4,166 a month, your mortgage payment cannot exceed $1,958 of a mortgage payment. What that typically equates to, and this all depends upon the market you're in, that equates to about a $200,000 house, meaning you're using FHA financing with 3.5% down, um, at an interest rate, let's say around 7.5% at the time of this recording. So we're looking at a $200,000 house with a down payment of $7,000, a 7.5% interest rate, 30-year fixed mortgage using FHA. Um, the taxes are going to vary depending on where you are. So give or take, a few, maybe 100 or so bucks. This is, homeowners insurance is included as well. Right now, we're seeing on a nationwide average homeowners insurance increasing all over. So you definitely want to make sure that you factor in a good amount for homeowners insurance depending on the house. In this example, we have $1,800 a year for homeowners insurance, as well as, yeah, that's pretty much it. Give or take a few more dollars for the mortgage insurance. Um, FHA has mortgage insurance, conventional has mortgage insurance. So you're probably looking at about a $200,000 house that you're looking to be able to purchase. So depending on what part of the country you're in, $200,000 house looks different, or the ability to purchase a $200,000 house is going to be different. Some markets may not have homes that are in that $200,000 range that are available, especially in an increasing real estate market. However, there are markets that do have $200,000 houses that you have the ability to buy. And from experience in that market, there's typically quite a bit of competition. However, it is potentially possible to purchase something at $200,000. So I'm going to show you what some $200,000 houses look like in, let's say, Atlanta, Georgia. But what I want you to understand as well is that with the example that we're utilizing, this is taking that a person making $50,000 a year has no debt. If you have no debt, and you can utilize 47%, if you qualify, 47% of your income to purchase a home, that gets you in the $200,000 range. If you have credit cards, a car payment, student loan debt, or anything like that, any type of debt, that changes how much you qualify for. So if you add a $500 a month car payment, your max payment now is below $1,958 a month. Now, if taxes come in a little less, then you can qualify for a little more. Same thing with insurance. But for the purposes of this video, we're looking at just estimates. It's just an estimate to give you an idea of how much you make, how much you can qualify for, and what it allows for you to do, and figure out, hey, do I need to pay down on some debt? Do I need to get a co-borrower? Do I need to wait? Do I need to try to find a job that pays me more so I can qualify for more? Also, do I need to bring a larger down payment or figure out how I can get a larger down payment? These are all things you definitely want to consider when you're looking to purchase a home, and also seeing how much you can qualify for. Just remember that, again, we go off of gross income. We don't go off of net. And let me explain the difference between the two. Gross income is if you make $50,000 a year, you're going to bring home, you're going to make, if you work your hours, let's say a salary, $4,166, and to be exact, 67 cents, right? Net is once they take out all the taxes, if there's a garnishment, any type of retirement, health insurance. Net is what you see in your bank account when it gets direct deposit. Gross is how much you make before they take taxes. Net is after taxes and expenses. Hopefully that makes sense to you guys as well. If this video has been helpful, do me a huge favor, give me a thumbs up. If you have any questions pertaining to home ownership, definitely you can comment below. If you're new to the channel and you have not already subscribed, do us a huge favor and hit the subscribe button so you can be notified when this channel has videos coming out. And we're going to get into, so this is what a $200,000 house looks like in the Atlanta area. So you're looking at some $200,000 homes. um, they vary. 300, 3 bedroom, 2 bath, they vary in size. There are some for sale currently in the Atlanta area. You definitely have to consider, where you want to be, if it's conducive to what you want to, where you want to stay, school districts and other factors. But there are a range of properties that are in the $200,000 price range that you could be interested in. Let's look at the let's look at a different area. Let's look at Delaware and see what a $200,000 house looks like. So in different parts of Delaware, you can find houses in the $200,000 price range. There's some for 100. There's some for 175. So all isn't lost if you only qualify for a $200,000 home. And just remember, you're looking to purchase a home that fits your family's needs, right? You are looking to um, make sure that you qualify for a home. What I want to make sure I always express to clients or people looking to purchase, what you qualify for and what you can afford are two different scenarios. You understand what your monthly expenses are outside of what shows up on your credit report, right? You want to make sure that you have an affordable payment. I also urge people to understand that what you want to pay and what a house costs are two different things as well. I understand you want to pay as least as possible, but you have to make sure that if you want a $1,100 a month payment, you're not going to get a $200,000 house in this market, right? Unless you have a larger down payment. So those are things to take in consideration. Again, we're looking at what you can qualify making $50,000 a year. That's $4,166 a month. that takes into consideration gross income, not net, and lenders approve you on what your gross income is. We did not factor in if you receive child support or if you pay child support. We didn't factor in if you receive alimony or you pay alimony. So there's different factors that you can have. If you've liked this video or you have any questions, definitely drop a comment below. If you would like to join my Facebook group, there's a link below. You also have the ability to join my weekly newsletter. That link is below as well. With signing up for the newsletter, you'll get a free home buyer's guide to help you walk through the home buying process. If you have any questions about purchasing a home using FHA financing, click this video here to learn about how to finance a home using FHA.